even though as we speak, the markets, they are in a correctionary phase right now. But one sector particularly stands out, and that is the FMCG pack. It's up this morning, up around 1.5%, whereas every other sector is now in the red. I mean, the sector clearly has been under pressure for the longest of time, and I think the inflation situation with in India stabilizing, I think that bodes well for some of these FMCG stocks, for their margins also, puts more discretionary income in their hands. Amit, I'll come to you first. Amit Ranjan.
Yeah, thank you, Suyash. The food inflation numbers, which account for nearly half of the consumer price basket and therefore FMCGs, came up at 8.6% yesterday, slightly higher than 8.3% in January, which is just right for the market, and therefore the positive reaction. The downside is that the persistence of the El Nino conditions and therefore an expected weak rainfall and a scattered sort of rainfall, and that would impact the crop. And why I say that? Because rural consumption in the FMCG sector accounts for 60% of the revenues of FMCGs, and that has been floundering. If we look at the stocks, Hindustan Levers has been the worst affected according to this, and because of this, the average household purchases have also gone down. Whether you look at cooking oil, that has been down, washing powder is down, Basmati rice is down, salt is down, therefore Tata Consumers. So most of these stocks, if you see Hindustan Levers, ITC, last 1 week returns, or even Hindustan Levers, even the last 6 months returns are in the negative. But most of the other stocks, Tata Consumers, they are all in the negative as far as the last 1 week and 1 month returns are concerned. Sir, do you see a turnaround in this sector despite what we are expecting with the rainfall and the El Nino conditions that are persisting?
So I think the El Nino conditions will weaken in the next 3 months. That's what the meteorologist predictions have been. Our ground research, talking to people, in the villages and those who actually grow crop, the Rabi crop is not that much impacted. Having said that, I think the volume growth in the FMCG companies will be a little difficult to come by. HUL has also already said that they are expecting about 2% growth in the company. So even though one can say that the worst is probably priced in, or the worst is probably done with. And with the El Nino conditions sort of receding in the next 3 months, we should have a better rainfall, and hopefully by the monsoon there will be better crop, and rural conditions can improve from there on.
So, looking at the stocks, do you see the companies which are less on the whose product mix is less towards the food side, like maybe like P&G and Colgate Palmolive? Those are the stocks that will perform better as they are even in the times to come.
No, it's a little difficult. I mean, Colgate is also a rural product. People there have also shifted towards, towards the actual toothpaste rather than just doing it with the other means. So the volume growth across FMCG pack, whether it is Colgate, HUL, even I would say premium products like Britannia, etc. They're facing a lot of issues in the volume growth. And if by for any reason the cost of the raw materials go up because of any inflationary pressure, then that volume growth will also sort of decline, even further. It could be even negative volume growth. So I'm not too keen at this point of time on these stocks and on these companies. I believe there will be better opportunities once we get closer toward the monsoon season and RBI rate cuts timing.